Hey, it's Ryan from the Option Income Advisor, and this is the trade of the day for August 6, 2021. And today I'm going to talk about a stock that I've actually been getting quite a few questions about this week, and it's due to the big run-up the stock has had. So I'm going to talk about AMD today, Advanced Micro Devices, and that's a stock that's been in the news. Obviously, because it's had quite a run up, but it reported great earnings. It was a little over a week ago. I think it was July 26th that reported earnings. But the stock surged that day and then continued to surge for the next 4 or 5 days. I think over a 6-day period, the stock actually ran up about 30%. And so it kind of raised these questions, is it the meme stock crowd? Has it gotten just too much momentum? Has it gone too far? And so, I've always said that, there's no exact way to skin the cat when you're trading the triple income wheel. There's plenty of different stocks that you can look at. There's plenty of different stocks that will work. It's really just about finding the right margin of safety, as I've always said, right? You can look at these stocks that have run up significantly and have momentum and still have, a very good, triple income wheel process with it. It doesn't always have to be a stock that has sold off significantly. Although, that type of stock has merit as well, right? If you've got a stock that has pulled back quite a bit, then you feel more comfortable, obviously, with selling puts. And so I'm going to talk just about the kind of merits of AMD today and kind of show you how I kind of think about a stock like this that has run up in the context of selling a put, and kind of where your mindset kind of needs to be with breakout levels and things like that. But it can definitely be a very profitable type of stock to run the triple income wheel on, and so we'll get into the profile here, and so you can see, I'm actually going to start with the chart today, because what I really want to show. Let me get rid of that. What I really want to show is kind of how this run up has happened. But I want to give you the context of it's really not as crazy of a run-up as people think. Look, this stock had been trading in a range. I mean, this is a classic range-bound stock right here. So, for the better part of, a year prior to this stock breaking out, you can just see, this is a classic range-bound stock, right? It's a stock that literally couldn't get out of its range. And so, that's the type of stock that it actually was a very good stock for the triple income wheel prior to breaking out, because you kind of knew, well, where are my levels that I feel comfortable with as the stock kind of bounces around, where are my levels I'm comfortable with? Well, you can kind of pinpoint the low end of the range. And so, when this stock broke out, and I kind of have the, actual breakout level, because you kind of technically want to go from the last recent peak, which was right around 96.5. And so, from that 96.5 level, you can see it broke out right here, and that's when it reported earnings. And so, it's not crazy to think, and the stock did report very good earnings, and it's had a phenomenal couple years just in general. It's taking market share left and right in an industry that essentially has a supply problem, right? There's all of, we talked about GM yesterday, and how, they can't manufacture cars because there's not enough chips and components that go into it. And it's really that way in a lot of different industries. There's a shortage of chips, everywhere. So these manufacturers of chips and processors have these backlogs of customers that want, to purchase product. And so the next few years obviously looks pretty good, and we'll get into those charts here in a little bit. But it's a good problem to have, right? It's a great kind of growth industry, we've talked about utilizing these growth stocks that don't pay dividends and utilizing them to, generate, your own dividend just by selling puts. And so not surprising again, they had a great quarter. Certainly the future looks pretty bright. These guys are in some of the most kind of high growth areas of tech, right? I mean, it's in PCs and Macs. So they just made a brand new chip for the MacBook. Data centers, gaming, they're in all the Xboxes and PlayStations and all that stuff. So, some high growth areas, and there's just, tons of demand for their products. So that's why the stock broke out. And that's what you want to see. You actually like to see a surge like this. So while, people are, certainly looking at the velocity of this move. I mean, it looks kind of parabolic, here, but it is a very good classic breakout, right? I mean, you've been in this range, it's now broken out. You want to see that stock push higher above that breakout level, which shows that the breakout is real, right? And if we can find a stock like this where we feel the breakout is real, it actually gives us some very, very good levels of support to then think about for a cash secured put. So, when I see this stock, and it did surge up to about $122 a share, it looks like it closed here at 118, but I think this day it did surge all the way up to like 122. So there was that day where everyone was feeling, okay, wow, did this thing just get caught up in the, meme stock mob, and is this thing going to run up like crazy? And it did kind of sell off, that day, which was good, and it's kind of sold off since. So I actually like the fact that it's, it kind of had that surge, but it sold off a little bit. But it's a great, again, just situation for a put, because that this breakout level will probably hold. And I like the fact, and again, you can kind of see this range bound market where the 50-day is kind of moving up and down, kind of through the 200-day moving average a couple times. That's classic range bound stuff, right? But you did get, the cross here, and I think given this trajectory and how the velocity of it went up, you're gonna see this shorter term moving average probably surge quite a bit. And kind of hopefully get into kind of a very nice uptrend for this stock going forward. And that's kind of how I would see this stock playing out. So you've got a couple areas here that I think are pretty significant. So I think this 96.5 level is pretty significant, which is that breakout level. Typically, a stock that breaks out like this won't go back down and close below that level. If it does, you may get caught back in this range, but I would expect that stock, given the earnings trajectory and the future outlook, to probably stay above that level. And then you've got the high end of this range, which was 95, and again, I think this 50-day moving average will move up. So you've got several levels here, kind of between, call it the 92 level and kind of 96 level, that I think would probably be pretty strong support. So I want to start with that because I think it's very important just in the context of, how people view this stock and what it's done this week. And, if you're worried about getting into, a triple income wheel process with this stock at this level, I think it's important to have kind of this context, as a backdrop. But I think it is probably a pretty positive chart to do something with here. So, let's go back and take a look at the profile now. So it did sell off yesterday, about 5%. And again, I think that's a positive thing because you didn't want this thing running away. What you wanted a nice breakout, continued breakout, and then, maybe a little bit of consolidation, which I think is what it's doing right now. So the strike zone we're looking at is 85 to 97. And you saw that there was a couple good kind of support levels kind of in that 90 range, 90, 95 range that I think are certainly reasonable levels. That correlates to about a 13 or 14% margin of safety requirement. And again, that's because of how volatile this stock has been. This is a stock that's got a mean volatility of 53%. It's pretty high. So you've got a volatility risk rating of 3, which is, again, low, which means the volatility and risk are pretty high. So that's kind of driving this number higher. And then you've also got a pullback indicator of 3, which means the stock is, again, trading close to all-time highs, which it is, right? It's sold off. It's about 8% off of its high, but it was raging, just a few days ago. So it's not surprising that it sold off a little bit. But, that's not a huge pullback for a stock with this kind of volatility. And so both of those numbers are kind of driving this minimum required safety a little bit higher. And it did just report earnings like we talked about. So, we don't have any earnings risk in the short term to really worry about. So that's kind of our level we're looking at. And then we'll get into the charts down here too. The big thing to kind of notice here is it's got a safety rating of 9. So that's telling me that the historical operating history is probably very good. The balance sheet's probably very strong. And we'll get into some of those metrics. And then the value rating of 2. And so you would expect that, again, with a stock like this that has surged. You see momentum and value tend to be inversely correlated. And so anytime you have a momentum stock that's been riding, some momentum, it typically correlates into a value rating that's low. And we'll kind of look at those numbers here in a sec as well. So from a valuation perspective, again, it's high, but it's not crazy high. So we've looked at a couple of these growth stocks, recently where, it seems high, and it's not these crazy high tech, no revenue, or no revenue. Most of them have revenue, but no earnings type of tech stock. This is a stock with real earnings, real earnings momentum behind it. So it's not a stock that's trading purely on sales. I mean, some of these stocks we've seen out there are trading at 25 plus, sales numbers, which is crazy, and then obviously have no earnings. So we're not looking at a situation like that. I mean, it's kind of a respectable, given how fast this company's been growing. You got a PE ratio of about 37 on a forward basis. It's not crazy, right? It's not out of this world. Now, if the market's readjusting and we get higher interest rates and we get a tech scare like that, that's probably your biggest risk here, is that the tech industry in general just trade off because interest rates are rising, and they're, as interest rates, go up, these cash flows that these companies are making, obviously are worth less. And so that's probably the biggest issue, but I don't see, where interest rates are right now, 37 being a crazy multiple by any means. And so when you're looking at it from that perspective, yes, it is a high multiple compared to most companies out there. But if there are companies that are worthy of a multiple like this, it's a stock like AMD that's in this industry that's really driving growth in all these different tech industries, right? And so, as we look at the sales and EPS chart look great. So this is why we have a 9 rating. When you can see sales and EPS grow like this, it's exactly what you want to see. You've got sales growing year over year. We got a big jump here, and another big jump in 2021, and kind of a correlated earnings jump as well. So what you want to see is if you get these huge jump in earnings, that they don't come back down, right? It's not like a one-time kind of sales thing. And I think a lot of stuff was pulled forward, with these businesses through the pandemic. Certainly a lot of areas that, utilize these processors and chips were, a lot of that stuff was sold and utilized during the pandemic. So there was a huge need for the chips, right? So there was some form of that pull forward, but what I want to see and what I like to see is the fact that, even in 2020 where you had that huge jump, we had an additional jump in 2021, right? So we still grew another 20%, and then forecasted for 2022 and 2023, they're still forecasting another 20% jump each year after that, right? So that's pretty impressive that you can have a jump like this and then have continued earnings growth, beyond that, which again correlates back to this multiple maybe not seeming as high, at these levels. And not sure what the pop was there, but for the most part, just very, very consistent year over year quarterly growth, and actually quarter over quarter growth, which is pretty impressive, right? And so that's why the stock has a safety rating of 9. It's pretty impressive. What you don't see in these charts is some of the balance sheet numbers. This is a stock that's got $3 or $4 billion in cash. I was just looking at some of the numbers, but as I'm doing my research for this video, but it's got a return on invested capital of like 60% right now, which is just mind blowing. I mean, that's basically saying that management, as they're investing capital, they're earning a 60% return on that invested capital, which again is just staggering. And it's a company that really doesn't have any debt either. So very strong balance sheet. Management's doing a great job as they're investing capital. All the things you want to see, which correlate to, again, a pretty high safety rating. So, those are the types of things you want to see. So now let's take a look at, the cash secured puts and just kind of see, what's available. We're going to, and you can see how liquid this stock is. I mean, these are all different, monthly and weekly options. And, this stock actually trades in dollar increments, which is incredible, right? Because you can actually pinpoint some very nice, risk and reward levels, and you can kind of choose, kind of that balance and that risk you want. And so we're looking again at September, which is September 17th. That's the monthly option. And so let me highlight a few of these here. And again, this goes back to, you can write puts and do the triple income wheel on, various different kinds of stocks. We've looked at lower volatility dividend stocks that you're just kind of enhancing the dividend. And then we've looked at higher, growth stocks like this that don't pay a dividend, that are higher volatility that you need, additional margin of safety. So the key is just having that margin of safety, which we obviously, help you out, by, giving you the strike zone. It's a quantitative number. It's pretty simple. Again, it's driven off of volatility, pullback, and, whether or not it has earnings risk, things like that drive, that margin of safety. So as long as you're able to find an option that meets your return and risk parameters, and it's in the strike zone, you feel pretty good about it, right? Remember, we talked about needing a 13% margin of safety, for this stock. So that kind of puts us down. Anything below, I think, what was it, 97 was our number. So anything below that, you can see is in the strike zone, or colored green. And so we're looking at, this 95, 92, or 90 would all be in the strike zone. So the question is there anything that meets our return parameters? And so our base strategy, again, we're shooting for about 1% on average. So this one right here, this 95, gives us that 1%. Gives us a 15% margin of safety from current levels, and we're going to need it. Trust me, this stock is not done, with its volatility. But it gives us, it's a delta of 14. I mean, that's a very respectable delta for, for a stock like this, where we're getting our 1% and, a very nice margin of safety there. And remember, we pointed out that 95 level is actually below the breakout level, right? It's the high end of the range it was currently trading in, and it's slightly below that 96.5 level that it broke out from. So I love that level, actually. I really like this trade a lot. So that'll be our base trade, and then we can go up a little bit higher than that for the aggressive trade. You could either I'd actually probably go up to this 100 level. The 100 level tends, once a stock breaks through 100, it's just a psychological level that a lot of times will hold on the way back down. So even though we had our breakout level below that, that 100 level could very well, be another, level of support there that we'd be looking at. So that gives us about 1.7 So just below kind of our 2%, target for the aggressive side, but, still gives us 11% margin of safety and, a delta around 20, which is great for the aggressive side. And then I would probably go all the way down to this 90 for the conservative strategy, which gives us right around 0.5%, so 0.6% average monthly yield, but it gives us a 20% margin of safety and a delta below 10 at 8. So again, kind of fits the profile of a stock for or an option for the conservative side. So again, I like this type of stock. I think having a portfolio, as we manage, the triple income wheel strategy, we typically have 25 to 35 positions on at any given time. And so I love having a mix of, stocks like this that are breaking out, very strong growth stocks that you feel very comfortable in the future, type stuff, where we're getting very good risk reward, with the options, and then kind of mixing that with, a handful of stocks that, maybe on the lower volatility side, where we can, enjoy, maybe a dividend, kind of just a lower, different kind of risk profile, right? So I love mixing those into a portfolio kind of approach as you manage this strategy. So I think this is a good stock. Don't be too worried about the kind of trajectory and the velocity that we've seen recently. I don't think it's gone too far just yet, right? So if we see this thing surge up again, up above 130. Again, it's kind of a point in time thing when you write puts. You probably won't want to chase it, because I still think this 95 below 100 level makes a lot of sense, just for a support level. So if it goes too much higher than kind of where it's at and surges up, 125 or 130, you're gonna have to take a step back and reassess. But I think as long as it kind of stays in this range, and you can get a put under 100, I think it makes all the sense in the world. So that's what I have. Hopefully that answers your questions about AMD, and I think it's a good stock for the long term. Take care.